Hey guys, today let's look at this term hyperbitcoinization. It's sort of a mouthful and not everybody believes in it, but it does describe an important concept in the crypto space. So let's dive in. But before we start, remember to like, comment, subscribe, and share this video with your friends. As always, thanks for watching. So, in 2021, El Salvador became the first country to adopt Bitcoin as a legal tender. This was an important moment for Bitcoin because it signifies that nations are willing to enact feasible crypto-friendly policies, such as a Bitcoin standard. As this trend develops, one potential result of crypto adoption at the government and central bank level is hyper-Bitcoinization. Let's look at the meaning of this rather long and interesting word. It actually has a few competing yet complementary definitions and visions that have arose from this term. Firstly, hyperbitcoinization is a phrase that was termed in 2014 to describe a transition from inferior currencies to superior ones like Bitcoin. Second, it's an idea where there's a tipping point at which the fiat economy becomes unstable, and people abandon these currencies and convert to Bitcoin. And third, it's a rapid and irreversible process of adopting Bitcoin as the world's primary monetary reserve. Simply stated, it's a Bitcoin-induced currency demonetization. So to summarize these three terms, essentially hyperbitcoinization is a Bitcoin maximalist position and scenario where it's Bitcoin for everything: store of value, medium of exchange, and unit of account. Let's look at some of the positive trends that may be leading toward hyperbitcoinization. While there are multiple paths that lead to this state, it ultimately starts with adoption. For hyperbitcoinization to take place, it needs a large operating network and support base of regular investors, merchants, Main Street businesses, institutions, public companies, private companies, ETFs, governments, and central banks, as well as the individual users. So is this happening? Well, yes, at least this trend is happening. The Bitcoin network is definitely expanding in size. Currently, there are over 14,000 reachable nodes, with the United States, Germany, France, and the Netherlands leading the way. However, over half of those nodes are country anonymous, so we're not sure where they are. If hyperbitcoinization were to take place, there would be an increase in operating nodes worldwide, which is a trend that we've been seeing over the years. Moreover, right now it's estimated that there are 100 million people who own Bitcoin, 200 million Bitcoin wallets, 53 million Bitcoin traders, and 400,000 daily Bitcoin users. Now, these numbers may sound staggering, but they're still only a fraction of the total world population. Therefore, if we were to plot these on the technology adoption S-curve, we would be in the early adopters to early majority stages. Hyperbitcoinization, on the other hand, happens when the Bitcoin adoption reaches the late majority and laggard segments, where societal penetration has already peaked and stabilized. With regards to BTC holdings, ETFs currently hold over 800,000 BTC. Countries hold over 250,000 BTC, public companies own 240,000 BTC, and private companies own 174,000 BTC. Hence, we can see Bitcoin adoption is spreading to investment vehicles, government holdings, and public and private companies' balance sheets. Here you can see a chart of the top 10 public companies that own Bitcoin. Hyper-Bitcoinization would cause a drastic increase in BTC holdings where governments would increase their exposure, central banks would adopt BTC, government investment bodies would create BTC-friendly investment options like spot ETFs, and businesses would settle payment and trade in BTC. The above examples are some of the positive factors that may lead to hyperbitcoinization and greater proliferation of Bitcoin throughout society. However, hyperbitcoinization is a two-sided coin. It would be the result of positive adoption worldwide, but it can also be spurred on as a response to negative phenomena such as inflation and central bank digital currencies. Well, some might argue that CBDCs aren't negative, but we'll get into that. These two phenomena are the two that currently dominate the negative indicators pointing to hyperbitcoinization. Inflation is one of the first dominoes that spurred cryptocurrencies to take off in recent years, starting with Bitcoin. From 2018 to early 2020, there was a 2-year bear market for cryptocurrencies that ended when nations worldwide enacted inflationary stimulus as a result of the COVID pandemic. After COVID hit, markets worldwide fell, and Bitcoin's price fell from $9,000 to a little above $5,000. But once governments responded by shutting down jobs, sending out payments to incentivize demand, and putting into law multi-trillion-dollar non-pandemic recovery-related spending packages, cryptocurrencies saw their biggest gains. Then, by December 2021, particularly in the United States, inflation reached a multi-decade high of 6.8%. Because of this inflation, we have seen a ripple effect where money has been devalued, the price of goods has increased, and there's been a deeper feeling of this loss of faith in fiat. If this inflation continues, it has the potential to speed up hyperbitcoinization. Now, what about CBDCs, central bank digital currencies? These are another factor that may support the hypothesis that hyperbitcoinization is a positive monetary alternative for the world. So CBDCs will strive to eliminate cash, but in doing so, they'll force everyone to use money that can be surveilled and managed. In a cashless society, people will be encouraged to use Bitcoin instead of cash because Bitcoin is actually a more similar alternative to cash than CBDCs. As a result, this is one factor that may strengthen hyperbitcoinization. Secondly, because CBDCs give governments and central banks the technical ability to surveil transactions, many people who live in the freer and more democratic countries may prefer Bitcoin. This is mainly due to sensitive issues around financial freedom, privacy, and control over data, since centrally stored databases that are run by governments have a history of poor cybersecurity standards and personal protection measures. Thirdly, because CBDCs give governments and central banks greater control over the economy and the money supply, they may lead to even more drastic economic policies than occur now. For example, limiting spending on certain sectors, favoring other sectors, adding spending limits, and adding forced spending with money expirations, to name a few. Essentially, CBDCs actually give the government and central banks way more control over how fiat is actually used. Whenever you have cash, you have that cash, and you can spend it however you want. People don't even have to know. But with the CBDC, that money might not be spendable certain places, or might have value other places, and all this will be decided by a central entity. And that doesn't sit well with everybody. Therefore, for those few reasons, CBDCs may lead to rejection from the population and a pivot toward hyper-Bitcoinization. So in conclusion, a hyper-Bitcoinization scenario is unlikely to happen in the next few years. This is because monetary and economic transactions take years to play out. But in 5 to 10 years, if the global economic recovery is still slow and cryptocurrencies like Bitcoin are growing in popularity, then it may be very plausible to see hyper-Bitcoinization in real time. One last note about this concept, as I said at the beginning, it's a very Bitcoin maximalist idea as it contains Bitcoin in the name. However, the overall idea of, let's say, hyper-cryptonization may be even more likely. As we've seen in recent years, Bitcoin has grown and grown in popularity, but more and more it's touted as the best store of value. However, some other cryptocurrencies are tackling a lot of the other areas, including even actual day-to-day use. So while hyper-Bitcoinization might not actually take over the world's financial policy, there is more likelihood that crypto could possibly become the new standard. However, there's tons of factors at play, and nobody knows what the future will actually look at. But nonetheless, now you know about the term hyper-Bitcoinization. Alright guys, thanks for watching this video. See you next time.